Boom. What's up, everybody? How's it going? Hope your Monday is off to a good start. I know the markets are steadily leaking here, but it is 11 a.m. on Monday morning, which means it is time for our weekly show, Futures Trading with NinjaTrader. We're going to talk S&P futures, gold, oil, Bitcoin, treasuries, what you need to look out for this week. I've got Jim Cagnina here from NinjaTrader ready to run you through his chart. So let's go. Smash that like button, please. Thank you. Here we go. Jim Cagnina, how are we looking here today? Well, I just mentioned the market's dropping, so I imagine we're not looking super great. I don't know.
Yeah, I know. It's interesting times that we live in right now. The stock index futures pretty much across the board are breaking bad today. I have a daily chart for the S&P 500 on the screen right now and kind of keeping track of that. It's kind of our global benchmark stock index futures that we look at here. We had a wild, Spencer, it's been a couple weeks since we spoke, by the way. How are you?
I know. So let's catch up on what you've seen here in the last 2 weeks. We didn't do a show last Monday, so walk us through what you've seen in the last couple of weeks as that vicious rally stalled out.
Yeah, and it's crazy. You could see it here starting on let me put my cross here so I could be exactly right on the 15th here. We were making new lows, and then this rally just kind of took off in a powerful way. And I think a lot of institutional investors got involved at this point. We had all the worst crosshairs in the world hitting us: inflation, war, China, COVID's coming back, all these things, Treasury, yields inverting, all this negative drag. And yet we had this huge rally from the 15th all the way up to the 29th. And people ask me, why? How does this make sense? And, when you take a step back and look at a bigger picture, investment money has to flow somewhere, right? You get negative yields in treasuries. And where else are you going to go, really? Commodities were scary because they were just going off the hook. And so this was one alternative, I think. So we saw some money flow. And then, sure enough, we have a really nice retracement back to the 38.2% retracement level on a short-term retracement, and to the 50% retracement on a long-term retracement. So we're looking bearish right now. And, all eyes are on inflation and there's 3 Fed speakers running around today saying stuff. And the focus is going to be on that, I think, for the next 24 hours.
Yeah, for sure. All right. So let's just run through each individual market here today as it pertains to levels you're watching for the rest of this week.
Right. Okay. So S&P is slightly bullish here. We're having this kind of retracement back down. The Nasdaq here is a weaker stock index.
Yeah.
A lot of their moves are systematic, but only not 100% of it. And they do move, kind of march to their own drummer here. This is looking pretty negative. We're below the 50% retracement on a short term. On a long term, we're approaching 23.6. So I'm in bear mode for sure in the Nasdaq 100 unless something changes. Russell is even worse. The Russell, remember, these are small cap stocks. They have a harder time borrowing. They have less CapEx. They have less international presence. So in this environment, this inflationary environment, they're going to be weaker, and they are. We're making new lows. We're going to be making new lows possibly. If you look at my little target down here from the 24th of February. So this is the weakest of the stock index futures. And Dow is kind of a little bit stronger, right? Dow is, they're a different animal, right? The blue chip, or however you want to characterize these particular giant companies. There's only 30 of them, and they've been kind of holding their own sideways here, right north of the 50% retracement here, and they're going to be like the S&P, a little bit stronger.
Yeah, before we moved on, I've just been paying close attention to the the performances here of the Nasdaq against the Russell against the S&P, because we know that the Nasdaq is used as a proxy for tech, as a proxy for growth, and the Russell, obviously, small caps have been weaker here for quite some time. So I've just been paying close attention. Have you seen any and the Dow is obviously a proxy for safety, right? A proxy for consumer staples and stodgy, boring stocks, defensive stocks, right? Have you seen any divergences with regards to how the major indexes are behaving, or is it more or less, are the relationships staying steady from where they've been?
No, well, I think the 100% systematic behavior we saw because of the war has changed.
Yeah.
I still think there's a component of that, but the chatter is, hey, maybe we need to be in dividend stocks now, get that 3.5%, and maybe a little positive yield on our money.
Yep.
And that kind of paradigm shift from a funds point of view, I think, is still happening. From the long-term passive investor point of view by their financial advisors.
Okay, interesting. Let's move on away from the stocks here and look at gold. So what do we got here? I mean, gold defensive play. There have been a number of days in the last couple of weeks where I've come in at red across the board on my screen, with one notable exception. That exception being gold.
Yeah. So again, we saw this huge, risk off move in gold, shooting us all the way up. This is the futures contract, shooting us up to 2083. Then we settled back down into this range where it's kind of from a technical analysis point of view. My channel, the high is at 1948 for gold, and the low is approximately 1924. We've been kind of zigging and zagging in there since mid-March. And, it's a little bit, in my mind, there's some price happiness here around 1934 in the middle there, but it's ready to either break up or break down depending on what happens over in Ukraine and Russia, I think mostly, but also inflation as well. So we had a big spike above my range today, and now we're kind of settling back down. We'll see. I think the natural level should be around 1860. So we're way above that as well. But this is definitely, I'm a little bit more bullish right now than I have been.
Bullish on gold, bearish on stocks.
Yeah.
Well, if you're bullish on gold, it would stand to reason you're bullish on silver, bullish on copper, bearish on crypto. But let's run through these markets here quickly, and then we do have some questions we want to get to, some other things we want to discuss. But I want to run through the dozen or so markets that we watch here. And by the way, chat, if you have any questions about anything, any futures market at all, ask away, please. Now is the time. What else we got here? This is crude.
All right, crude oil. This is the WTI light sweet crude here, delivered in Cushing, Oklahoma. This is the U.S.-based benchmark. Remember, there's other ones as well. There's Brent, there's Dubai, but we're tracking crude. And believe it or not, we're in a bearish market right now. I mean, I have a real weak trend line there. I just drew it a couple minutes ago just to kind of visually train the eye. But, from 116 down to 95, sub 100, this is trending kind of this is a bearish pattern right now. And I think we've seen some supply issues. We kind of benefited, the International Energy Agencies releasing some of its stockpile. Baker Hughes rig count was positive here in North America last Friday. More rigs are drilling. So the supply side of the equation is, we saw a pretty good EIA number last Wednesday in terms of our domestic supply. So that's been kind of positive in putting downward prices on crude oil, which is obviously a good thing.
What did you make of the reaction to oil? What was it? It was Wednesday, I think. That was when the news came across that the IEA was releasing some reserves, and the amount of reserves they're releasing dwarfed the amount of reserves that we're releasing, right? Just getting a lot more oil out there in the market.
Yeah, and I have my crosshairs right there on that Wednesday. Yeah, exactly right. And so that's what I'm referring to is the actual supply side picture looked better, and that was a big deal. I mean, that was a big deal here. We broke, ever since then we've been below $100. Ever since then, we've been below $100, and that was I don't know if it was a surprise or not, but the market kind of said, "Okay, I'm liking this," and we had that big sell off here.
Yeah, I don't know. I'm like surprised. I'm a little bit surprised because it would seem like the entire crude oil market would depend on the release or not of more reserves, and that to me that kind of seems like the end all be all. Is that not the end all be all here? Like because we're basically still right now we're trading where we were pretty much from Wednesday's low, more or less,
Mm-hmm.
right? I mean, we're off a little bit there, but it's more or less the same. So
Yep.
everything that's happened since Wednesday has been pretty much range bound. Is the release of reserves, is that the only headline worth paying attention to here as it pertains to oil, or are there other things we need to be watching?
Well, yeah. So, I mean, I mentioned the Baker Hughes rig count. They track North American active rigs, and that grew on Friday from the previous Friday. More drilling, more, the correlation is there. And then the Energy Information Administration here in the U.S., a division of the Department of Energy, releases their Wednesday inventory reports, and Wednesday's inventory report was positive, as opposed to the trend being negative. We were depleting. Then we had a gain on Wednesday. So I don't have the exact numbers in front of me, but that was another positive kind of softball that was thrown out there. OPEC Plus has pretty much poked everybody in the eye and said, "Hey, we gave you our plan in December for this calendar year, and we're going to stick with it."
Do we? Wait, didn't we just had an OPEC thing? There's no OPEC on the calendar for the immediate near term, right? I don't think.
I don't. I think their last month. Yeah, I mean, we just missed their last monthly meeting.
Yeah,
they do it. I think they do the regular meetings every month, and the meetings literally take 10 minutes, like 13 minutes. I think was the last one. Because it's all part of the script. So, but my point is, there doesn't seem to be an interest in any consensus from a relief point of view. And given that Russia is in OPEC Plus, I could see that it might be one of the reasons.
Right. All right. Well, let's run through the rest of these markets, and then we have some other things to discuss. So, crude oil, got through that. What's next?
Yeah. So, just real quickly, gasoline futures kind of just staying sideways here. It's kind of, of course, this is one of the distillates of crude oil. This is one of the byproducts. Once you get to crude oil, you got to transport to a distillery, and they make gasoline futures. So, that should go in sync with crude oil prices. Not quite as dramatic, but it's going to track, which is good. We want it to be a lot lower, obviously, if we're driving to Grandpa and Grandma's house coming soon. Natural gas futures, on the other hand, are just railing. As far as I can tell, there's storage issues, not so much getting the natural gas, like actually storing it. Right, it's got to go somewhere. It's got to be transported somewhere.
Sounds like a replay of April 2020.
Yeah. Like, I mean, every day we're making new highs here in natural gas. I think that's there's no end in sight, pretty much. So we'll see. Hopefully there will be, but right now there's not. And we're coming into spring. Remember, there's a seasonal aspect to natural gas too, right? We're not, it's spring. It's getting warmer out.
What is that aspect? What is that aspect?
We should be a lot lower.
Because it's warmer and no one's heating their house as much.
Exactly right. A lot of air conditioners run on electricity, right? So
right. So okay, how are you playing this at all, and if so, how?
Well, no, I mean, me personally, no. But again, I'd be looking for places to buy natural gas futures. I'd be waiting for dips to buy in, with the expectation that the long-term trend is still positive. Okay,
and then the trend line being what? I mean, like falling, like what would be like support your sell signal on this?
Yeah, I mean, the 23.6%, I'm going to use fib lines. Now, you got to keep moving the fib line up as you make new highs, but eventually we're going to get a turnaround, and because it always does. And the 23.6, once we get a close below that, right now it's 5,823, give or take. It looks like it's a long way to go on the chart, but it really isn't, because this market, I mean, look at these giant, enormous candles we saw over here in February. This price moves here. So that's kind of my target that would be my target to change my mind.
All right. What else we got?
All right, so micro Bitcoin's next on the list. Sellers. That crazy gap was filled from the 25th to the 28th. And this was in the futures market. This is the Bitcoin futures. And sellers have taken over ever since then, right back to my longer term support and resistance line, 949. So 49.49. And we're right there right now, exactly, as we speak. So this is looking bearish. Just looking at the candles looking bearish. But you referenced the relationships too, is another thing to look at.
I'm sorry, say that last point again.
Well, you were referencing the relationship between micro
yeah.
Bitcoin,
I mean,
equities.
Bitcoin moves with tech, right? So in a sense, it moves with the Nasdaq, right? Like as the Nasdaq goes, so goes Bitcoin, so goes crypto, so goes Ethereum, right? They move together. Whether you and I've been in the camp that you know I was trying to argue that over the long term, I don't necessarily know how correlated Bitcoin really is, but like you can't argue with the short term. You can't argue with it. The correlation is there. It is obvious. It's clear as day. On days when the Nasdaq is down, Bitcoin is down, and vice versa. It's very rare to have that not be true.
And it's weird because it's like Bitcoin's almost like the anti-gold too. They kind of have an inverse relationship there too. Not as dramatic as what you're talking about, but it's still there and it's crazy. I mean, gold, we have a rally, and now look at this. So I don't know, but the beauty about this, the greatest thing, Spencer, is you can sell in futures. You can go short, you can go long, whatever you want to do, and your margin is cleared up immediately once you liquidate a position to do another trade. So it's kind of a little bit. It's a big advantage. Advantage goes to futures here if you want to speculate in Bitcoin in particular.
For sure. I mean, I know it's possible to short Bitcoin itself. But I don't even know how you'd go about doing that. It probably requires some crazy fees, but the futures market gives you that option like that.
Yeah, exactly. So. It's a level playing field. There's no pattern day trade or anything. You're not borrowing money from somebody like you would with one of the exchanges where you'd have to borrow to go short. Not here.
All right, let's run through the rest of these, and we have some questions from the chat, and I want to get to your tip of the week as well.
Okay. We'll race through the rest of them.
Treasuries, let's go.
Yeah. This is not a surprise, in my opinion. This is a 30-year Treasury bond. It's toward the longer end of the yield curve. I think it's the most appealing to trade for retail traders, and the yield curve right now is whacked. Right? I mean, it's if you look at the futures yield curve, it is inverted, where the 2-year is higher than the 10-year, and it's kind of zigzagging up and down. It's not until you get to ultra bonds on the very far end that you have like a regular yield for that particular product. For these 30-year bonds, my opinion, the yield curve eventually is going to have to normalize, which means the yield for these particular bonds have to go up, which means prices have to go down. And we're exactly seeing this trend here. This is a wicked trend down. And the thing about treasuries, in my experience, I was in the Treasury bond futures pit in the 80s, is when it starts trending, this train you can't slow this train down. So again, I'm looking for places to sell this particular market on a daily basis.
All right, I want to pause for a second here and address this question from Beach Bum Trading. Beach Bum Trading asks, what platform are you all using to trade futures? Beach Bum. It's on there on the screen, man. Look above the chart. It says NinjaTrader.com. The reason that we are doing this show specifically with NinjaTrader is because that platform has proven time and time again to be one. The different platforms are good for different things. NinjaTrader, their specialty is futures. Jim, yes?
Yes, sir. And, for sure. We're using the NinjaTrader platform. It's been around for a long time. The tech staff behind this thing is constantly upgrading, maintaining. Data feed's great. Trade execution's great. And just to put in perspective, I was a futures broker for 20 years. And before that, I was a commodity consultant. And I used every online trading platform possible in that whole process. And I can name them all. And believe me, there's a lot of them. This is, in my opinion, this has given me the best experience, and this is the best platform. And that's based on that's based on my career.
Right. Okay. Treasury bonds, 30-year, looking bearish. Yields going up.
Yep.
Prices going down. There you go. What is that there?
So I'm throwing in really quick the Euro FX versus the US dollar. This is not the Forex market.
Loop here. Okay.
Yeah, I'm sorry, Spence. I have to throw this in because right now you have this dynamic between the U.S. interest rates and the Euro Union interest rates, right? And even as early this morning, they had another 5% basis point track expected by December with the euro, right, going from 65 basis point increase to 70 basis point increase. We're tracking at a 250 point basis point increase, and really the relationship between the two currencies are based on these interest rates. And so there's a lot of, as this ping pong match is going back and forth, you're going to see a lot of movement in the euro FX futures, which means it's tradable, very, very tradable. Again, the trend is down here. So when the euro is going down, it means the U.S. dollar is getting stronger. That's the currency pair, right?
Yeah.
So I've been tracking this a lot. It's very interesting. We're targeting a recent low here on March 7th, and I think we're going to be in a downward trajectory considering the interest rate differential.
Okay. All right, a couple more markets to get to, and I know we've had some questions in the chat that we're going to hit. I promise.
Okay.
So U.S. dollar.
Yeah, dollar index across the board is strong. I'm bullish here. And again, it's a phenomenon of the Fed, the FOMC. I mean, with a 250 to 300 basis point expected rate hike between now and the end of the calendar year, it's going to make the U.S. dollar more attractive. So that's why you're seeing this big rally right here. And I don't think it's about to stop. I think we got some more upside on this particular rally.
So the textbook says as rates go higher, that is better for the dollar.
Yeah, because it's when so the U.S. dollar is an index, right? So it's the U.S. dollar versus several different international currencies. And it's kind of, they have an equation that that kind of calculates it. And this measures the strength of the US dollar, right? So from a textbook point of view, yeah, I mean, there's do you want to own dollars or do you want to earn euros? Your stuff in dollars or euros, or dollars in yen or dollars in something else. And this kind of tracks that. And again, with that projection of where our rates are going, I think this is why it's triggering this.
Yeah. All right. What hadn't we hadn't covered
Russian ruble. We're gonna get there. Hang on, we're almost there. One more second.
Okay, I'm glad. I was waiting for today to talk about this with you, Jim. How on earth is this possible?
I don't know. I mean, I agree with you. It's staggering, right? I mean, look where we were, right? This is the war, right? Right. Boom. War was announced. We hit that low. A huge depreciation in the ruble versus the US dollar, and it's clawing its way back up. And there's a couple different ways to look at it. One is, hey, maybe the futures market knows a little bit more than we think it knows, and that maybe the war's not as bad and it's going to end quicker. I don't know if I buy that or not, is the reason, but that's one kind of conventional wisdom. The other is, hey, the Russian, this currency is in place still. People are using ruble to buy things. In Asia and other places.
That's not a bar to clear. That's why the currency is still around. That's the bar now. Come on.
Yeah, I mean, it's being used. I mean, it is being used. I know the sanctions is a big deal, and there's a lot of money being flow that was stopped and diverted. But the Russian ruble is not dead, baby. I mean, it's moving. I mean, at least now in my channel, it is in bull mode.
I mean, S&P over the weekend downgraded Russia's debt. Russia's defaulted on their debt. S&P Global says, in no sane world is that good for the ruble. So,
I know. And I'm just going to draw a short-term area of what I'm going to call support right here. Well, I'm going to leave this rectangle up so next week me and you could look at it. And we could say, hey, do we break down like we should into that rectangle or not? But right now, it's just kissing the trend line.
Yeah, it just sort of boggles the mind there for a second. All
right. Do we have time? We're running out of time. So
no. Let's keep on going. Well, yeah, wait. We have to get to wheat. We have to get to wheat here. Can we get to wheat?
Yeah.
All right.
So wheat's kind of behaving finally, kind of like in a normal pattern, right? I have a channel here. I drew 1048, top of my channel approximately 1160. We're right into it, right? We traded below it for about a week or so. We kind of shot back into it. 50% retracements right here. So I would say it's a sideways trend, not as good as a downward trend from a commodity inflation point of view, but a sideways trend is better than a huge rally again to try to make all-time highs and just kind of mess with the global food supply is in trouble for sure. But this is domestic U.S. wheat futures, and so sideways action I think is what we're seeing here. I don't see us returning to above the channel anytime soon, which would be 1158. I think we're going to stay in the middle there for a while.
All right. I think those are the major markets that we've been looking at.
Yeah.
Right.
Yeah.
Unless there's anything else that I missed. I do want to briefly get to your tip of the week here, Jim, because there are things that we need to be watching out for, macro-y type things that will affect all the futures markets. So let's get to that right now if we can. What do we got?
All right, tip of the week it's going to be familiar because it was similar to the tip of the week a month ago. But we have the consumer price index tomorrow. All eyes are on this. And as a matter of fact, one could argue today's price action is anticipatory of this release. It's a monthly release. Again, basket of goods and services that is tracked routinely every month. The consensus range is wildly divergent. It's from 0.6 to 1.4, with the actual consensus being 1.1.
1.1 is the average there. 8.4% is going to be the number that gets all the headlines. Well, the 8.4 that's the year over year change. Whatever that number ends up being is going to be the number that gets all the headlines, because month over month, nobody really cares about that, right? Year over year is what we care about.
Right, exactly. Year over year, 8.4, and the consensus for that, and I'm sorry that my slide doesn't have this, but the consensus for year over year was 7.7, the range, 7.7 to 8.6. So 7.7 on the low side, 8.6 on the high side, and that's a big range too. I mean, if we're tracking 7.7, I think you're going to see some appreciation. If we're tracking 8.6, I don't know if I'd want to be long tomorrow.
Well, like in theory, CPI above the estimates, higher inflation, markets will go down. But I'm not even that confident in that prediction because maybe we're back to the whole bad news being good news thing. But no, the Fed has said they're going to fight inflation. So more inflation means more action from the Fed. So I guess the bad news is bad news. So I don't know. I can't make sense of this, heads or tails of this stuff.
Right. But a lot of it has to do with what the expectation is. And if it's a surprise to me and you in the market, is it a surprise to the Fed? And if it isn't, why aren't they doing more now? And if it is, what else are they going to do? So,
I don't know what else they can do. They're already raising rates and they're already going to be doing the balance sheet runoff. I'm not sure what else they can do, honestly.
Yeah, well, I mean, I don't know. I mean, they could be more aggressive for sure. So as an example, if you're in the Peter Schiff crowd or in the zero hedge crowd, it's like, why are you waiting? I know this is like the end of the world crowd, but why are you waiting? Why don't you hike rates today? Is there something? There's not anything in your charter that says you got to wait for a meeting. You could convene a meeting right now and do it. Why aren't you tapering sooner? You could do it right now. So that's the kind of what's happened is, we have this process now we didn't have before. We have the meeting, we have the numbers that are projected, we have all the Fed speakers. There's 3 of them today running around talking that I know of.
Yeah.
And then you have the press conference. You never used to have that stuff. In 80s, 90s, even early 2000s, you would be like, all right, the Fed just released they're up 25 basis points. And that was it. Now you have this conversation and all this political drama around it, which has changed the whole nature of their behavior.
Yeah. All right. I'm going through the chat now to make sure I didn't miss anything. Mark asked, are there micro natty gas futures? Jim?
Good question. I believe the answer to that is yes. The answer to that is yes, but be careful. Make sure, I don't have it up on my screen right now, but make sure, let me just get my quote board up and show you what I'm talking about. Just make sure there's liquidity in them, right? So we have net gas right now is done about 73,800. That's a pretty good volume number right now. So when you look at the micros, just make sure that that the volume is okay. And usually I have about a 30,000 to 35,000 criteria on volume to say, okay, we have some liquidity or we don't have some liquidity. Because with less liquidity, it's more, you're not going to get as good fills,
right,
and you're going to have slippage and all that stuff.
Jonathan asked about coal. Do you trade coal at all?
No.
Okay.
No, that's a specialty market. That's not a real retail market, and I've never ever looked at that.
Yeah. All right. Guys, Jim Cagnina joins us on our channel here every single Monday, but he is live throughout the week on various NinjaTrader platforms. There are links to where you can find Jim's webinars in the description. I'm going to bring some links up on the screen. The link up on the bottom there, the scrolling banner, ninjatrader.com/platform training. That's where you can find more from Jim. You can also try ninjatrader.com/futures or /get started to learn more. Again, all these links are in the description of this video. Jim, any final thoughts for us for the week?
Yeah. By the way, let me simplify all that stuff on the links. If you just go to ninjatrader.com/events,
okay,
that's when you're going to get, we do a morning live trade, trade setup event, an afternoon trade setup event, and a bunch of stuff in between. So that events link is pretty good. And by the way, when you said micro natural gas, think E-mini natural gas. It's a smaller size contract, but it's an E-mini instead of a micro.
Okay.
That's tracking. I was just checking while we were talking. That's tracking some okay volume, still a little light, but that's the one you'd want to look at. Awesome. So just, going forward, man, there's 2.5 major crosswinds. We have the Fed and inflation. We have Russia and Ukraine, and then a little bit of China. So just be on your toes. Make sure you have your stops in, and be patient.
I guess that's it. All right, Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. Jim, it is always a pleasure. Have a great rest of your day. Have a great rest of your week. We'll talk to you again next Monday when we know how bad inflation was or wasn't in the month of March, and hopefully have more clarity on any one of these macro issues, but I'm not holding my breath for that. So, Jim, have a great one.
Thank you.
All right.
Spencer.
All right, guys, we're going to end this show going live with Benzinga Live right now. Aaron Bree, myself, a whole roster of guests joining us today. So I'm going to end this show, redirect you over to those guys. Do me a quick solid and just hit that thumbs up button. Just hit that like button. It takes 2 seconds, and it really does help us in the eyes of the YouTube algorithm. So thank you for that. Thanks to Jim. Thanks to all of you in our chat. Benzinga Live is live now. I'm going to head over there, and I'll see you guys. See you guys right now.